Welcome to Secrets of Success podcast with Dr. Shane Needham. And I have Adam. We'll hear about him in a minute on my show this morning. And we're going to be talking about business, investment banking, private equity, and things that affect Main Street, not just Wall Street. So super excited to hear his story and his business story and all the other stories that he can tell us. And so welcome to my podcast, Secrets of Success with Shane Needham. You can follow me on LinkedIn, on Instagram, on Facebook. Right now, we are live on Facebook. Thank you, listeners. Thank you, watchers. Thank you, audience. Everybody that makes this podcast a success and everybody that continues to follow me on social media. All these podcasts can be available at my website. You'll see the banner streaming there at drsneedham.com. You can also find them on my channels on SoundCloud, on iTunes, on Spotify, and YouTube. I have channels all there as well. So you can see all edited podcasts after the fact there, and you can watch them live on Facebook. Just follow me on Facebook and you'll see when podcasts are coming, or follow me on LinkedIn or Instagram. So thanks again. And let's again to give a background. We've been doing this podcast for, I don't know exactly, but it's been about a year, since the pandemic started. And we have had a great time. Our theme is always never be outworked. And we'll talk about that, Adam. And certainly you have some great stories there. I know you do, and about perseverance and passion and grit. And what do we talk about? We talk about everything that can affect somebody's mindset to say about the attitude of never being outworked or never giving up. And so my background, I not only am a podcaster, but I'm also a business owner, an entrepreneur, a scientist. I have a PhD in chemistry. I'm also a bodybuilder on the side, a power lifter. I also, my favorite job is being actually a father of 4 children. And that's my favorite job and my most important job as well. So lots of different things that I have going on in my life, and they're all around never be outworked. Stay tuned. I am writing a book on this subject. I'm actually in the process of writing 2 books. I've always wanted to write a book and be an author. And I've written lots of research papers and research chapters in books. Now I'm going to actually write books on one. It's going to be on building teams. And stay tuned. We're designing a logo and a name for the book. Super excited about that, about building teams and the facts about building a team and the proven methods that actually work. And then also I'm going to be telling my life story, all the way from never being outworked when I was working on farms when I was a teenager to my current situation. And it's going to be a tell-all book: entrepreneur, bodybuilding, powerlifting, business, so many different things, and lots of life experiences around the mindset of never being outworked. So Adam, welcome to the show. Viewers, welcome. Thank you for joining us. Adam, can you introduce yourself?
Sure. Happy to, Shane. It's great to be here. And thanks for having me on the podcast here. So I grew up in the Washington, D.C. area, just outside Washington, D.C. in Maryland. Actually, the son of an immigrant. My father came here from another country to come here actually for medical school. My mom's here from the States, but grew up in the DC metro area. Is a great place to grow up. I joke we had the best field trips as a kid, going to the Congress and the White House, etc. So it was a really good time. Ended up going to college in upstate New York, and then found my
Where'd
way
you go?
to
Where'd you go to college?
Skidmore College. It's in Saratoga
Absolutely.
Springs.
Yes. I know some people that
Yeah.
actually, when I worked in Connecticut at Groton, Connecticut, at Pfizer, I knew several people that actually graduated from Skidmore. Wow. What year did you
Sure.
graduate from there?
In 2001.
Interesting.
So,
Wow.
and then speaking of Groton, I actually, my mom's from Groton and my family's from Groton, so spent many summers growing up in Groton, Connecticut, and drove by
Like
the
was
Pfizer facilities over the years.
Wow. Well, that was the original research headquarters. And it was just oh, wow. In the 90s, that's when I worked there. And it was just amazing to work there. So was your mom, like, was her family in the Navy or something? I mean, Groton's like the submarine base capital of the world. Is that what it was?
Her father, her father, my grandfather was an engineer helping to build the Nautilus, one of the first nuclear submarines for General
Yeah.
Dynamics there, or electric boats. So
Yeah.
very familiar with sort of that hard work, and it's something that's been instilled in me for quite some time, and just hustling and trying to put in hours to be prepared. But interesting in terms of my background to kind of catch it up to today. So in well, just I was really into. I'll get to the story here in a second. But in high school, I really wanted to be a golf caddy. I was really in love with golf, Shane.
Really?
Absolutely, really wanted to play. And there was a fancy country club nearby that needed caddies, and I really, you could play this fancy country club if you were a caddy there. Turns out I wasn't good enough to be a caddy, I guess, and so I didn't get the caddy job, but had a family connection to an investment bank here in Los Angeles, where I am today, and managed to get an internship back in high school, actually, with this investment bank, and started there when I was 16 years old. This investment bank
Wow.
is actually a predecessor to my current firm, Intrepid, and so started with our prior firm, which was a firm called Barrington Associates, as a high schooler, and really grew up with the firm in the mid to late 90s, and joined the firm full time after I graduated from Skidmore. And really the rest is history. I've been with the same group of partners ever since 2001, basically.
What a great story. So tell me what you did when you were in high school. I mean, at an investment bank. That is such great experience. That's awesome.
Yeah. It wasn't a really good introduction to the industry. So this is before there was the internet, before there were publicly available databases, or databases you could pay for, about the private equity industry. And my job that first summer was to develop a list of 500 to 600 private equity firms in during that first summer, because now there's well over 2,000 or 3,000 private equity firms, but today, ever since back in 1996, there was maybe 500 or 600. So developed a list of these five to 600 private equity firms, called them up and interviewed them on their investment criteria, the types of businesses they wanted to invest in or buy, and then manually input that into a database. And the way these private equity firms stayed in touch with you before they had websites or sent out email blasts was they would literally send physical mailers with letters saying, here's the companies we've invested in, here's what we're interested in investing in the future. And my job was to put that all together in a physical and electronic database and calling all these firms. It was just an awesome introduction to the industry. And to this day, I still get random letters from private equity firms saying, that I spoke to them way back in the day.
Wow, what great experience. Absolutely. That is wonderful. Tell me about, more into introducing yourself. Like, tell me about yourself, and not what you do, what an investment banker does, what your firm does, but also about your life, your whatever you want to speak about, your family, what drives you, your passion.
Sure. Sure. So I've been happily married since 2008 to my wife, who's an attorney here in Los Angeles. We have two
Congratulations.
young boys, both elementary school aged. One is a third grader and one is a kindergartner. And when I'm not busy working on deals for work, I'm taking them to baseball games and soccer games, and that's something really love to be involved with my family. And my wife and I, before COVID, we'd love to be out and about town, going to new restaurants and all that fun stuff. And one of the things that really grounds me, Shane, is every morning I wake up at 4:55 a.m. and I go for a run. I typically average between 5.5 and 6 miles every morning, and
Good for
that's
you.
my alone time. I started doing that in around 1999, and I realized there's no way I'm ever going to get a workout in if I try to delay it late in the day. There's always an excuse to be found, and so I'm always setting the alarm clock super early. Now it's just natural for me. And during that time, I listened to podcasts. I've recently got into audiobooks, and it's been my alone time, and the way I try to stay centered and grounded in the community.
Good for you. That's awesome. And I think, and we talk a lot about that on previous podcasts of mine, that with being physical, being healthy, having alone time like that, it only makes you better mentally and emotionally. And so, good for you. I
Sure.
think that, yeah, you need that alone time. You need that movement, whatever it is. If you like to run, ride bikes, lift weights, whatever it is, just move. Move.
Yep.
That's good.
Yeah,
Good for
look, and
you.
it wasn't an easy journey. You start with, a couple steps, then you do more the next day, the more the next day. And I'm a big believer in sort of the chemical balances that you get from that, right? And just the ego boost that you get from it. I think that's really helpful because,
Oh, yeah.
all of the gut punches I take during the day at work, I think it sort of helps level things out. But in addition to that, Shane, so at Intrepid, what we do is we help companies either raise capital or to think about going through some type of strategic transaction process. And that can take a lot of different shapes and forms. It could be selling 100% of the company to another company in the industry, or it could be selling a minority interest in the business or a majority stake in the business. And so part of what me and my team do is really help our clients understand what their options are. And my partners and we started Intrepid in 2010, but we all came from a firm here in Los Angeles, actually, the firm that I joined in the mid 90s called Barrington Associates. That firm started in 1982, really doing the same thing. And Barrington grew to be one of the largest middle market investment banks in the country, representing entrepreneurs and private equity firms when they were looking to go through these strategic transactions. Barrington was acquired by a large bank called Wells Fargo Bank in 2008.
Right.
And Shane, it was nice. They fed us a really nice, good pipeline of deals under Wells Fargo. But then our world changed when Wells Fargo bought a big bank during the financial crisis called Wachovia, more on the East Coast. And similar to what you were saying earlier, Intrepid deals mostly with Mainstreet type companies, whereas this new investment bank that Wells Fargo bought during the financial crisis was much more Wall Street focused. And that really wasn't our DNA. And so that's when my partners and I left in 2010 to start Intrepid, really to go back to our middle market, Main Street roots. And we've been very fortunate at Intrepid to grow. I think we now have about 50 or 60 professionals all here in Los Angeles, and
Wow.
very blessed to grow. And even during COVID, 2020 was a record year for the firm, and we can talk more about that later. But both in terms of
Congratulations.
revenue for Intrepid and deals closed.
Well, so let's back up just a little bit. I know these are words that aren't big to you, and they're very understandable, and I understand them too, and I want everybody to understand them. So let's describe, so a couple of things. What does an investment bank do? And how can we relate that to Main Street or people that we would just know about? For example, I'll just use some very common terms here, like a mom and pop business. I know you've actually have some great stories about a mom and pop business, so to speak, that's generational, that then they wonder, okay, you get to be a certain age. Now what do we do with the business? Do we sell it to the children? Do we give it away? Do we sell it to a competitor? So explain all those things, and what middle market means, what investment banking means, and really tell a story.
Sure. So investment banking can take a lot of different shapes and forms. You've got big investment banks like Goldman Sachs or Morgan Stanley, JP Morgan, and what they have different activities where they will do sales and trading, where they'll help buy and sell stocks and bonds. That's not what we do here at Intrepid. Um, they will have advisory work, which is what in something like Intrepid does. Sometimes bigger investment banks will help take companies public, and so they can get access to more capital, or so their shares can be publicly traded on either like the NASDAQ or the New York Stock Exchange. But when I think about it, an investment bank, because it's near and dear to my heart, is really around the advisory portion of the business, where we're advising entrepreneurs or business owners on their transaction options, and either helping them raise money to grow or to bring on a private investment firm to help them grow. So I'm trying to think of a good example here, Shane. Well, like recently in your space, so we just represented a bioanalytical lab slash CRO, really fast growing company, very specialized business. And this was a company that was owned by two scientists. They were amazing individuals, super smart, brilliant individuals when it comes to science. and they were working with a who's who of global pharma, really marquee clients. And as they were growing, they had been approached by other bigger companies in the industry that were trying to say, hey, we love your skill set. Can we acquire you? Or from different investors saying, we'd love to invest in your business and help you grow. And they're scientists. They're amazing at running a bioanalytical lab and a CRO, but they don't know much about what happens when someone knocks on your door and says, I want to buy your company. And that's where we come in. We help them understand what's a good price for their business, what's a fair price for their business, what are all the terms that are important to negotiate to make sure that you keep as much of that purchase price as possible. And we're quarterbacking a process to help them explore their options and ultimately complete a transaction so they can put a lot of money in their bank account at the end of the day.
Yeah. Yeah. That's a very good story. And so what about as far as investment bankers? You basically, what you're saying is you're really an advisory role. You're an advisory role to say, here's what we say you should do with your business to take it to the next level, whatever that is, whether it's maybe acquire somebody or merge with somebody or sell the business. So you guys, your firm and you work on those transactions to make sure that they're stable and you get the best return on investment. And so how is that different from private equity?
Sure. So private equity has the checkbook. I don't have the checkbook. So private equity is a group of individuals. Often they might be former investment bankers, or maybe they come from industry. There's all different types of private equity firms. I think our proprietary database at Intrepid now tracks, I think it's between 2,000 and 3,000 private equity firms that have at least $250 million of capital. It's incredible the amount of money that's out there. But a private equity firm forms a partnership called a general partnership, and then they go out and raise money from either high net worth individuals or pension plans or college endowments or specific investment vehicles. So when people talk about private equity being Wall Street, in many respects, their money comes from Mainstreet. One of the largest investors in the country in private equity firms, or what they call alternative assets, meaning not traditional stocks and bonds publicly traded. One of the largest investors is the California Teachers Pension Fund. You've got large teachers pension funds in Canada that are very active in doing transactions. And a lot of these pension funds for firemen or policemen or other first responders or other government professionals invest in this alternative investment class called private equity because they've been shown to have higher returns than the stock market. And that money goes back ultimately to fund their future pension obligation. So a private equity firm, they go out and they pass the hat around and they raise an institutional fund or a dedicated fund chain. And sometimes those funds can be as small as $25, $50 million. And sometimes in the case of like a Goldman Sachs or a Blackstone, it could be 15 or $20 billion. There's all different types of private equity funds. And one of the things that I've seen in my career over the last 20 years I've been in the business is a lot more specialization of private equity funds. There used to be, you could be a generalist private equity firm. One day you invest in healthcare, next day you invest in retail or restaurants, the next day you invest in manufacturing. And some of those firms do exist, but more and more you're seeing specialized teams or even dedicated entire firms that focus on particular subsectors of the economy or industries so that they can be more helpful to the companies that they invest in. So what the private equity firms, they go out, they raise a bunch of money, and then their job is to go invest that money in great companies to help them grow. They want to build jobs, they want to grow revenue, they want to grow profits. And ultimately, typically within 3 to 5 years, the private equity firms then want to go sell those investments or the specific investment that they make to realize a return, so then they can return that capital with a higher amount to the pension funds and other investors that have backed their fund.
Very interesting. Very interesting. So how is that? How is private equity, for example? And we'll get into misconceptions here. How is it related to venture capital, or is that totally different?
No, it's not totally different at all. Venture capital is another type of alternative investment class. And I think about the different stages of uh, the types of investing based on the stage where the company is, Shane. So venture capital deals with very early stage companies that maybe haven't yet generated a penny of revenue, or
Got
they're very small, and they are going up often to Silicon Valley. Los Angeles has a great venture capital ecosystem now, and they raise like a Series A or a seed round, or maybe they get to a Series B. Early stage companies. Next, as the company matures, then they might move to something called growth equity, which is sort of a crossover between venture capital and private equity, where maybe the company is generating revenue, but maybe they're not yet profitable, but it's proven there's a real business there. Whereas in venture capital, sometimes those companies may not make it. That's just the reality. That's part of the venture capital model. They're trying to hit grand slam home runs, but recognize that they're going to strike out a few times every time at the plate. And so then you
it.
might transition to growth equity, where it's still more proven, the company's more proven, but maybe it's not immensely profitable, and a lot of the growth equity dollars go into the company to help it grow. Maybe that's to fund new product development, research and development, building out a new facility, or it could even be sales and marketing spend. It could be for a whole host of different reasons. And then as the company matures beyond that, when they get to more steady cash flows or steady profitability, then that's where private equity would want to invest, and they really can help the company think about growth to the next stage and scaling up and building a lot of the team and infrastructure to help them grow. And one of the big distinguishing factors in my mind between growth equity and private equity, Shane, is in private equity, when they invest in a company, they're much more comfortable with the money going out to the shareholders in terms of what we call liquidity to de-risk. Whereas in growth equity and venture capital, the investors really want the money to stay in the company to help it grow and invest back in operations.
Got it. And so when we talk about investment bankers, private equity, venture capitalists, growth equity, all these terms, and I would like to know the history behind it. I certainly have seen in the last 5 years that I followed a lot of this, that I've seen some great success stories of, a family doing very well because they've trusted in an investment banker, a family doing very well because they sold their business through investment banking and private equity, whatever it is. Obviously, we know of lots of good stories about venture capitalists as well. So what is the history and the misconceptions, I guess, and where do you think the poor reputation comes from at lumping all those together, that it's evil, capital is evil, venture capitalists are evil, private equity is evil? That's just a thought that I have, but that's not what I see. That's not the data I see. Do you have a history there, or do you guys ever talk in your industry about why there's that misconception?
Sure. Yeah, I think a few years ago, I mean, look, I'm not a private equity professional, but we deal a lot with private equity, maintain a ton of relationships. And I think going back, I don't know, 5, 10 plus years, I think the private equity world realized that they were maybe being mislabeled by some of the folklore from the 1980s with books like Barbarians at the Gate, with the takeover of RJR Nabisco, and people just, swashbuckling capitalists and not concerned for the every employee. And I think that's really changed a lot. And the industry is very much about responsible growth and really trying to help companies grow and prosper and help the economy, right? Because there's sort of a multiplier effect to that. When you provide people with good, steady employment, they can go spend save their money or go invest that money back in the economy. So that's a really key part of it, Shane. And I think part of the negative conception comes from, private equity wants to be efficient, right? They don't want to invest in companies that are necessarily bloated cows and don't have good chances for success. And so sometimes with private equity, not always, there may be a focus on efficiencies and tightening the belt. And sometimes that can come in manufacturing improvements. Sometimes that can come in reducing marketing spend or making it more efficient. Or sometimes it may come with headcount reductions, and sometimes that's just a natural evolution of a company's life cycle, or with technological improvements where maybe one day you needed 100 employees and the next day you needed 80 employees to do the same work. And so I think there's some misconceptions around that, but private equity is not in the business of purely slashing and burning and racing to the bottom. They want to see a company grow, they want to see a company prosper. And most of our conversations when we're talking with the private equity firms, it's okay, the company's doing 50, 100 million today. How can we grow it to be 300 million, 400 million? What are the ways we can help unlock this company's potential? So I think that's where a lot of the misconceptions may come, when people think about the industry with very broad strokes, Shane.
Well, certainly, talking to and knowing some people in your industry, and it is about efficiency and productivity. And being a business owner myself, I want efficiency and productivity. I don't want too many people working for me. I don't want too many instruments. I don't want things sitting idle. And I've seen what that can do. And to be more productive and more efficient, it actually returns profits to the company, which can then be distributed to shareholders and people as higher salaries, as bonuses, as all these different things. And so there are these misconceptions. I have no idea, but I can see falling into the trap and not being educated. That's what I want to do on this podcast, is educate people about private equity, about venture capitalism, and also about investment banking, your roles. And so, because I just was fed the line because I believed it and I didn't look into it. Oh yeah, investment banking's bad, private equity's bad, venture capitalist is bad. And then I just fell into that line because the media loves those kind of terms, right? And so they go with it. And I didn't realize really how many people that they had actually helped, and thinking about the deals. I know of a good friend. He has a deal right now. I won't even talk about the industry. I'd probably give it away. But they're going to be starting to go through a transaction, and they're going to sell the company. Well, and here's the thing that private equity does do, or investment banking does do when they advise you, is sometimes you get these companies that may be 300 or 400 employees now and have multi tens of millions of dollars of revenue, right? And sometimes you'll employ uncles, cousins. That can be good, don't get me wrong. But sometimes you're trying to do a favor for somebody, and it sounds good, and it sounds good for your family. When I think private equity goes in and investment makers go in and say, well, that might sound good. We can make something else work, but that's not good for the rest of the employees or the company if that person's not producing. And so I've heard that happens
Sure.
a lot. And of course, that can make headlines, right? You fired the uncle, you fired the cousin, you fired whoever it was that was really, really close. And so it's one of those things where it has to be about efficiency and productivity. Nobody is going to buy a company and want to destroy it. That makes no sense. I mean,
Exactly.
would you agree with
Makes
that?
no sense, Shane. I think that's spot on. Yeah, I think that's spot on, Shane. Makes no sense. And you know, um, a lot of times when we're representing family-owned companies, not only am I a financial advisor, but I feel like sometimes I'm a family therapist, I'm a psychiatrist, because
Right?
when we're representing an entrepreneur that's built his or her business over the
Yeah.
past 10, 20, 50 years, whatever it is, it's like they're losing, selling off one of their children, right? And it's very
Sure.
emotional, and it's not just about the money at the end of the day, but who the partner is or who the buyer is, and making sure that they're going to take care of the employees. And there are a lot of times where we get involved where there's various family members involved, and sometimes those family members are very strong contributors and they're legitimate employees, and other times it's a way for the family to keep other people employed. And there's no right or wrong answer. You just got to try to find what's comfortable for the investor, and making sure that things are running efficiently, and that everybody goes in eyes wide open and knowing what they're stepping into. And a lot of times, Shane, what we're doing at the beginning of the process is sitting down with our clients and really trying to understand what are their goals. If I give you a blank sheet of paper, what would you like to see happen here? Some of my clients want to sell their company and go off into the beach. Some of my clients want to go sell their company or go on to a new, completely new business endeavor. Some of them want to retire and focus on philanthropy. And that's one of the things that really drives me is in an indirect way, I often can help sell a company for a really high price and get liquidity or cash to my clients, and they can often use that money to reinvest back into various philanthropic initiatives that they have. And so that's something that I take a lot of pride and joy in as well. Seeing buildings built in their names or scholarships in their name,
Yeah.
whatever it may be. And I
Yeah.
know I played a small piece in helping them unlock that value. But really, at the onset of the engagement chain, it's just listening to what the client wants to do and then trying to design the right engagement or process to help achieve those goals.
Yeah, well, that's great. And it just sounds like you really love helping people. And I think that's very inspiring. It's inspiring to me for sure. And I'm sure a lot of our viewers as well. It's just, and seeing their story almost to completion, right? I mean, they've built this chest of wealth and now they can do what they want with it. And you're a part of that process. And I think that's absolutely wonderful. So if you were to talk about one relatable Main Street transaction. And okay, let's go get back to this first. Describe what middle market. So obviously that you're in a middle market. Um, so obviously there's a low market, middle market, high market, whatever you want to call it. Describe those different
Mhm.
portions of the market before we move on to my next question.
Sure. So Intrepid typically focuses on the middle market slash lower middle market. And for us, we think about that. So a small transaction for us is maybe in around $25 million of enterprise value or purchase price. And from there to about 400 to 500 million is really our sweet spot. That's where we spend most of our time. And then when you start to get north of 500 million to a billion or north of a billion, that's where you start to get much more towards the Wall Street focused firms or larger investment banks. And there's thousands of companies. Every time I think I've done the last deal with a middle market company, Shane, and I'm like, oh, there's no other companies left. There's, that's the
That's,
bedrock of the U.S. economy is
it is.
small and middle market businesses, mom and
Totally.
pops, like you said, Mainstreet, and that's
Yeah.
who we really love to focus on because it's much more of an emotional decision. It's not a clinical decision where what's the price per share that you're going to be buying my company at, and
Right.
so that's what we love to get involved with.
Well, that's great. So if you so thinking about what that mid market means, and it's a revenue range, which a lot of times. So just describe to the viewers a company that's worth 25 million in general. And I know this. I mean, you can look at revenue per employee and all those kind of things, but how many people would that probably employ?
It really depends. It could be, 15 employees, 25 employees, sometimes 100 employees. It really
Yeah.
depends on the type of business model and what they're doing. We've seen some amazing companies that employ literally like 5 or 10 people that make 100 million of revenue. We've seen companies that
Wow.
have hundreds of employees that make far less. That's the technology has been the great equalizer in the last 5 to 10 years, Shane. It's incredible, and just the efficiencies that companies can get, whether it's with outsourcing with technology or just doing things better, faster, stronger with technology, and that's what makes it really cool. We've worked on deals where you've got a handful of software developers that develop some software and then they just put it up online and the thing just starts to print money. I mean, it's pretty incredible.
But
So
what it means is, let's say average of 15 to 20 to 30, 40 employees. These aren't big companies. These are easily relatable companies
no,
that you can just go down to your own Main Street and there's companies like that. And for you to be representing those types of companies, it really says a lot about what the middle market means. It's basically the breadbasket of America for capitalism. And I think that is a great story
sure.
that you guys have about that. So thinking about that middle market, what it is, do you have that could really relate to Main Street? And you do have a focus. Could you describe your focus a little bit, but then also,
Sure.
segue into a story that'd be very relatable to Main Street that you can talk about over the past 10 years if you've done these transactions. Like, this was really cool. It was a family business. They did this in healthcare or whatever it was. Describe that. First of all, what your specialty is, because I think you probably have
Sure.
one, and then relate that to a family business.
So I actually grew up in this industry as a generalist, and like I was talking about how private equity firms got more specialized, investment banks had to get more specialized too. So at Intrepid, we have a consumer team, we have a beauty products team, we have a specialized apparel team, a technology team, a digital media team, and so I help lead our firm's healthcare and life sciences team. We do a lot of work with different CROs and bioanalytical labs, which I know is near and dear to your heart. We do a lot of work with physician practice roll-ups and healthcare providers. We do a lot of work with healthcare IT companies. That's a really hot space in telehealth. So those are just some of the types of things that we focus on, and we're even trying to get more specialized by the day within that because healthcare is so massive.
So
And
broad.
we've got 8 professionals here at Intrepid that focus on healthcare and life sciences, and it's one of our fastest growing practices here at Intrepid.
Well,
So one,
I don't want to steer you in the wrong direction, but I remember a deal that you guys did over the last year with telehealth, and am I correct on that? Some kind of telehealth or something.
um, telehealth. We've looked at several transactions in that space. I mean, we advise on one company that helped physician practices move towards concierge medicine. Because a lot of
Okay, that's
physicians
what it
are
was. Yes,
overwhelmed.
yes,
Yeah, a lot of physicians are overwhelmed with the number of patients, and they want to get back to the times where they could spend an hour with a patient and really get to know their patients. And so
yeah,
we represented a company on a merger with one of the larger players in the space, to merge these two large concierge medicine practices together and really help physicians sort of get back to their days of really focusing on patients and doing what's best. But another deal we did that was pretty prominent, I guess, in the healthcare world I worked on a couple years ago, and I think this could relate to folks, even though it's really high science. I think it's very relatable. This is a business in Orange County, California, called Ambry Genetics. And Ambry was one of the pioneers in something called genetic diagnostics. And this is amazing research and technology, and the science is accelerating so fast. And they could basically take a sample of your blood or and determine, do you have certain biomarkers or genetic mutations that might predispose you for certain hereditary cancers. This actually got really famous because Angelina Jolie, the actress, took one of these tests and determined that she was a carrier for the gene mutation for breast cancer, and ultimately had a preventative double mastectomy completed. So this is the type of science that this company Ambry was doing, and they had been around for 15 or 20 years and really had bootstrapped the company, but had grown to be one of the largest players in the space. And the founder and largest shareholder of that business had determined that it was the right time to sell the company or bring on an investment partner to help it grow even further, Shane. And we ran a transaction process contacting different labs or other genetic companies across the globe, talking to different investment firms. And we ended up selling that business to a very large Japanese strategic buyer called Konica Minolta. And a lot of
like
people wonder, well,
the cameras. Really?
exactly. And so, that just goes to show you through our creative outreach, Konica Minolta had really wanted to focus. They had done a fair bit of, they had a division that did healthcare imaging technologies
Wow.
and really wanted to pivot a lot more into personalized and precision medicine. And so Konica Minolta really showed a ton of interest in Ambry, and I got to give them credit. They don't think just 3 years down the road; they're thinking 30 years down the road, and how we're very much in the
Yeah.
early innings of this genetic revolution. And we ended up selling Ambry for $1 billion to Konica Minolta.
Wow. And that's just a
Yeah.
founder and a shareholder. Wow.
Yeah.
That's
I mean,
incredible.
he had
What a
raised
great
some
story.
friends and family capital along the way, but yeah, it was an incredible story. And it's really cool for us, Shane, to see what these companies go do subsequent. And Konica Minolta has actually used Ambry as one of its marquee assets to build a precision medicine initiative. And I saw something just a couple weeks ago where Konica Minolta actually announced a partnership with Ambry and their precision medicine group with Amazon Web Services to help leverage the power of the Amazon digital cloud to power genomic information and digital
Crazy.
biomarker information. Really
Wow.
fascinating stuff.
Well, I'm going to relate nutrition, precision medicine. Precision medicine is I'm going to try to explain to people, and if I get this wrong, it's kind of my industry, but it's basically taking a clinical biomarker, for example, your cholesterol level, your estrogen level, your TSH level, whatever level it is, a typical clinical biomarker, and it gives it a number. And it usually says if you're normal or not normal. And so then you're diagnosed. Okay, what's the prognosis? What do you do now? Do you go on therapy? Do you exercise more? Do you eat differently? Whatever. That's precision medicine, is clinical a clinical number of your blood work. Well, I think it's huge because obviously analytical chemistry, which is my passion. I've always wanted to be an analytical chemist. So you have to use instruments and mass spectrometers and chromatography and all these really cool things that I just absolutely love and always have. And that's what I started my company doing. And that's what I did when I was at Pfizer. And so I love that it's analytical chemistry, but it can also tell you so many things about what's happening in your body. And some of that's metabolomics. I won't even get into that. I've had somebody on my podcast about that. Thank you, Professor Tim Garrett. And so it's about what's happening to your body, and we can measure that. And I really think that I gave a talk at a conference a couple of years ago. You have eye mobility mass spectrometry, and I think that we will soon, based upon some of even the information you're talking about, we'll be able to have our own genome and our own metabolome. We'll measure it. We'll take our finger stick of blood, just like a diabetic measures their blood, put it in this machine. It'll say, yeah, here's what you are. And you'll eat appropriately or do something appropriately that day. And it's very personalized medicine. I think that's really, really the future. I even talked about that, oh my gosh, 30 years ago at Pfizer when I was there. I actually wrote a little brief research paper on it. Now, how does that combine? This is great, Adam, because it combines with your telehealth and concierge medicine so well, because that's the future.
Yeah. Yeah, I was gonna say, I think that's spot on, Shane, where there's this movement towards the quantifiable self, right? People want to
Yeah.
turn their body into ones and zeros and actionable data, right? Is it right for me to run on the treadmill for 45 minutes every morning? Or is it right for
Right?
me to lift weights or eat this or eat that? Or should I take this precision oncology medication or should I not? Right? Am I going to have a better chance to live? And so, the quantifiable self is something that our healthcare team in the industry is spending a lot of time looking at, whether it's biomarkers or whatnot, to really help improve people's lives and ultimately help them live longer and happier.
Yeah. And you said it yourself, quantify yourself. It's about being personalized. I think that the days of here, take 3 of these and call me in the morning. Well, you take 3 or I take 3 could be totally different results. So it should be personalized. And I think that's where concierge medicine is going. I don't like the term concierge medicine. I use it. It is great. It's number one, it's cheaper for me and it's more convenient. I can, with an app or a text, I can text my doctor for me or my kids 24/7. And I get a response at least, hey, we'll call you in the morning. If it's an emergency, we'll do this. No ER visit necessary. And so it's actually it's more efficient, more convenient, and they're there for you. And it's a monthly fee, but I think it's great. It's so worth. I'll take a picture of a rash that my kids have, and they'll say, "Oh, yep, here's what it is. Go down to this pharmacy, pick it up. No appointment necessary." And sure enough,
Yeah.
7 days later, the rash is cleared. And so for you bringing those two types of transactions together, whether it be personalized medicine, it's all kind of personalized medicine, but concierge versus the genomic testing, I think that's just absolutely huge. And it just shows what an investment banker actually can do. Because a lot of times these companies, as you know, you see them, they struggle with capital. And a lot of them that don't have capital, they can't move on and their technology dies. It absolutely dies. So what a great story. I think that's a really, really good story. Go
I
ahead.
was a couple years ago. Well, this goes back a few years, but it was actually pretty relevant. Last year, we represented a leading manufacturer of ventilators for critical care transportation applications and
Wow.
emergency preparedness. And we did that transaction, and we sold them to a larger strategic buyer. And really, this larger strategic buyer could help commercialize this smaller company's technology and get more ventilators out there to developing countries and across the country, rural healthcare markets. It was a fun deal to work on.
So interesting. Talking about ventilators, we're going to get to this in a minute. Was that important, like especially on the onset of the pandemic? Was that company being used at all for those ventilators or anything? Or do you know the story?
We haven't kept up with those guys too closely, but we are friendly with some other folks in the ventilator space, and a lot of people in the ventilator space saw their revenues go through the roof last year. I think the pandemic, hopefully for better, has really put the importance of preparation and preparedness front and center. And so you need to have an emergency stockpile of ventilators or medicines or whatever. So a lot of companies did benefit in from that COVID outbreak.
Certainly we know how much it is to protect your own supply chain, right? I mean, global trade is great, but when global trade stops because of a pandemic, wow, it can be really a harsh environment. And so very interesting. So let's talk about the pandemic a little bit. Obviously, it's been on everybody's mind the last year for sure. What did it do in your industry with mergers, acquisitions, transactions? What did it do to values? Talk a little bit about that. Number of transactions. Talk about all that.
So a year ago now, Shane, I was shaking in my boots. My partners, we were shaking in our boots, much like everybody when at the onset of the pandemic. Deals were going on hold, deals were dying, they weren't going through, right? In March, April, and into May. People, investors, they don't like uncertainty. Strategic buyers, they don't like uncertainty, right? And is a company going to grow next year? Is it going to contract next year? And that creates challenges, because if you're going to write a very big check to either acquire or invest in a company, you want to have confidence that you can get your arms around at least a reasonable case of what the future may look like. So initially, it was very hard to get transactions done, in the springtime last year. But once there was news around vaccines being developed, and I think people realized that we can navigate this COVID environment, we can get through it, we're going to get through it, and people saw the confidence in Q3 and Q4 and the back half of 2020. The private equity markets and M&A markets came roaring back. So why was that?
Yeah. Why was that?
One, you had these private equity firms that have raised billions of dollars from all the different pension funds and high net worth individuals, and they've got the money burning a hole in their pocket, and so they want to go out and invest it, right? And there's not a lot of great companies to invest in. So number one, you had a lot of pent up demand and dollars on the sideline that was ready to go be invested. Number two, I think COVID really separated a lot of the stronger players from some of the weaker players. What companies were able to pivot and take advantage of different technologies, or were able to, navigate COVID really well? That was something that I think really showed the resiliency of certain business models or management teams as they were navigating the COVID-19 environment. And so those companies that did well during COVID actually garnered more interest in the second half of 2020 as a result. And you had this confluence of factors, and then as well, and not to get too political here, Shane, but with the change of administration, there's likely that taxes were going to go up, and a lot of my clients deal with capital gains tax rates, and tax rates probably aren't going down. They're most likely going up. And so a lot of my entrepreneur clients wanted to lock in lower tax rates here in 2020, or last year in 2020, I should say. And so you had this perfect storm where people were getting their arms around COVID, a lot of money on the sidelines, tax rates still very low in the long-term view of things. And, people had a good eye to the future, and it just created very attractive valuations as well. So we were selling companies for record multipliers and record valuations in the back half of 2020 last year.
Wow. Wow. It's a great story, and a lot of pent up demand, probably some politics involved as well. I mean, to get the, most return on your investment, taxes are always going to be a factor. I don't see taxes going down anytime soon either. And so it's just kind of the nature of the beast when we spent so much money as a government, and that's a whole segue. And so Adam, what else do you want to add before I get into my famous last two questions about never being outworked and failures and turning failures into successes and those types of things? What would you like to sum up for people that the investment banking industry is for Mainstreet? Can you put that in just like a sentence or two?
I think we're counselors and strategic advisors for growth. And at least that's where we play.
Yeah.
And we help entrepreneurs think about how to take their companies to the next level, whether that's, again, raising capital or growing, and just really understanding their options. And it's something that we take a lot of pride in, and sometimes that leads to a transaction right away for my firm Intrepid. Shane, sometimes it means we wait 3 4 5 years, or we may not ever end up working together, but I love being a resource to help seeing my clients grow in that manner.
I love it. That was a great summary. Great summary. That'll probably end up on our clip to actually advertise this podcast. That was great. And so my last two questions as we wrap this up. I don't believe in failures in life. First of all, knowing just a little bit about you, you probably don't either. It's a learning experience and you move on. And I do think that everything happens for a reason. And certainly, I think that sometimes when we fall down, there's a reason for it and we can get back up and make that a success. So having said that, can you name a time in your life that, other people would have thought, oh, wow, that's a failure. Or maybe even internally, you internalize it and said, oh, that's a failure. But months on down the road, you got back up, you put on your shoes, you got back up, you worked harder. You thought, wow, really good things became of that. Do you have an experience like that?
Yeah, I would think about the time when my partners left our prior firm to start Intrepid. And hopefully you or your friend Shane never experienced this, but it's a really bad feeling when you wake up in the morning and don't want to go to work. It's a really, it's not a good
Sure.
feeling. And
Sure.
just the way in the prior firm, the way I recognize why they did what they did, it made a lot of sense for them, but it really wasn't the right fit afterwards for my partners and where we had gone from Barrington. And so we could have just sort of stuck it out there, but it's not a good feeling to not be really passionate about what your work is, right? And you gotta love what you do, especially in my world where we're putting in ungodly hours. And so from that real challenge, and I wouldn't go so far as to call it a failure, Shane, but it was a real adverse time. um, it led, I was in my early 30s at the time. It led for me to go on this amazing adventure in terms of starting Intrepid, walking
Yeah.
into an empty office, realizing, hey, we got to go out there and go find clients. We got to hustle. We got to find
Hustle.
deals. We got to make
Hustle.
deals,
Yeah.
and I joke, the third day we're there, we're like, oh, this is how long ago it was. We got to fax somebody something, and we didn't have a fax machine. So you go out to the store, you go buy a fax machine, or, you want
Yeah.
to do something, you just get it done yourself. And building
Totally.
Intrepid and starting from a blank sheet of paper was an amazing experience. Not only just working on deals and leading deals, but building a firm. And, as I think, we actually sold Intrepid 2 years ago to the fifth largest bank in the world, which I think really validates what my partners and I have built over the last decade. And it's something that we're just super humbled and proud about.
Well, what a great story, and and a great mindset, Adam. And I worked for a large organization, and a large organization. I worked for Pfizer, and it's no different. And by the way, I had a great experience. Now, I think a lot of that's mindset. I had a wonderful experience. I worked with a great boss, a great group. I worked with the first LCMS in the industry from SciEx, serial number 1, actually. So it's really, really cool. So I have nothing, but I worked with a lot of people there. And so when I started my own business, and Pfizer stock was at its pinnacle. Viagra had just been approved. I mean, at its pinnacle. And I started my own business in the year 2000. I had so many people there saying, why would you do that? That's the dumbest thing. That's the dumbest mistake. I can't believe you would do that. And I just knew that I could, let's just say it didn't work out. Worst case scenario, I go back to industry, right? But here I sit 20 years later, and it's been a great ride. Now, what I'll say that I like about your mindset, and believe me, I guarantee you we can share war stories about sleepless nights, not having enough revenue, can't pay anybody, or whatever it is. And it's like, I've never got that close, but it's like, you think about those things as an entrepreneur. What are we going to do next month? Okay, we got enough for this month. What about next month? Forecasting? No, you didn't do that. You were hustling so much. There was no forecasting. And it's about hustle, but I liked your mindset. And I want to encourage people and try to inspire people. If you do sit in your chair at work and you despise it and you don't enjoy it for a long period of time. I worked for a great company, a large company, and so many people said, oh, I've only got 15 years to retirement. And every day their day sucked. And don't do it. It's not worth it. It's not worth your mental or emotional health. For whatever reason, that environment's not good for you, make a change. It is scary. Get outside your comfort zone, because that's where you grow. Nobody grows when they're comfortable.
Exactly.
They grow when they're uncomfortable. And that's what you did. And that's why you guys have had so much success. So really, that's an inspiring story. And what I tell everybody about entrepreneurship is, it doesn't matter if you're selling pencils on the streets of New York City or rocket fuel to NASA, whether it's highly technical or not, the concepts are the same and the struggle is the same. And until you've been in that person's shoes, I don't think you should be judging it. Whether they're independently wealthy or not, don't judge it until you know what they've gone through. So what a great story, Adam. So this theme in this show is never be outworked. So it sounds like you have that mindset. You just would never give up. The future for you, it's going to be great. And it's already good. It's already great. It's only going to be better. But describe the mindset of never being outworked for you and how you've persevered throughout your life. And give an example or do whatever. Just talk about it. Never be outworked.
Well, look, I think it starts every morning when I wake up and I work out, right? I mean, just, focusing on my mind and my body and my health, right? And it's a pain in the butt to wake up at that ungodly hour and be tired. But you kind of get into a rhythm, and that really helps me stay focused and grounded. And look, in my business chain, when I'm working on a transaction, we have a saying in our firm: there's a million things that can go wrong on a deal and only one thing that can go right, and that's the transaction closing. So all the time we're trading body blows or navigating difficult circumstances, and we might contact 50, 100 different potential investors or buyers and getting no, 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 or not the right fit, or explaining it. But it's about finding that core group of investors or buyers that really fall in love with the business. But it takes a lot of work and thought and hard work to get to that point, and making sure our clients are really prepared for that process. We've thought through everything that makes the company great, or all the different challenges that we might face in the process. And if people want to poke holes in the company's story, well, okay, are we prepared for that, right? And really just being ready for it. And so, every deal, we're facing small failures all the time, but really learning from those and trying to figure out, okay, why did this person not want to buy the company? What can we learn from that and talk to the next guy about to make it even better?
Always learning. And let me tell you a story about Adam. So when we were offline and we were getting prepared for the podcast this morning, I had an epic weekend in Salt Lake City at Snowbird, where they had 17 inches of new snow, and I snowboarded with my two youngest sons, and it was epic. And I told them it was like possibly the conditions of a lifetime, and we just had a great time. So I'm telling him that, and we were talking about, well, how was your weekend? He says, well, it was good. I got a couple of transactions done, or something like that. And it's like, obviously he loves this stuff. And it really, really is cool, but he takes time for family. He takes time to take care of his physical and mental health. And that's truly, when you have it figured out like that, all those pieces, family, business, health, all those come together. You can't just have one. If you only have one of those triangles, you're not going to be healthy. So Adam, you have been a fantastic guest. You've educated me. I've learned a lot. I'm sure our viewers have learned a lot. Thank you very much. Let me give some shout outs again. Thank you, viewers. Thank you, listeners. Again, you can see this podcast probably in about a week. It'll be edited and online at SoundCloud, at YouTube, at Spotify, and also on iTunes. You can find me on LinkedIn, on Facebook, where we're live, and you can find me also on Instagram, and also streaming across the banner on our podcast right now is my website, drsneedham.com. You can find previous podcasts there and more information about me as well. And thank you very, very much. And if you want to sponsor my show, I have sponsors in the works right now, and I actually have a few sponsors already. And so thank you very much. If you want to sponsor my show, reach out to me on any of those platforms and contact me. And I would love to have you sponsor my show, and we can talk about what kind of advertising you can do on my show with the types of sponsoring levelships that you have. So thank you again, Adam, very, very much. You have a great day in Orange County, and we will definitely be in touch. And thanks again. You did a great job on the podcast. Thank you very much.
Sure. Thanks, Shane. This was a lot of fun.